This year has been absolutely brutal for the housing market, but does that mean that we're going to see it continue into 2024? Now this year, rates have went up considerably. Even a 30-year is about 7 to 8%. Even if you're looking at a 5.171 ARM, you're looking at 5.5%. Now with that, guys, take it with a grain of salt because those are the normal interest rates. When we seen the Federal Reserve actually lower the rate to near nothing during COVID, we had over 64% of Americans that did refinances at 3%, 3.5%, some even 2.5% to 2% on a mortgage. Well, as of right now, guys, a lot of financial institutions are carrying that long-term debt on those mortgages at a very, very low rate. So will the housing prices continue to increase in 2024? The answer, according to stats, is saying no. They're expecting that big of a difference, but they're expecting a 1.7% decline next year in the mortgage rate, which means it could be a little bit cheaper. Now, again, taking that with a grain of salt, since October 2019, looking at December of 2023, housing prices are up roughly 40%. That is right, guys. In the course of 5 years, we have seen almost a 40% increase in the housing costs, which means even if there is a little bit dip, if there is a little bit of reprieve with the housing prices, is it going to make a big difference? According to statistics, according to Bank of America, CNBC, a bunch of different sources, they say there is going to be a little dip in the housing market prices, but overall not going to be much movement. But there is still good news at the end of the tunnel because will mortgage rates bring us some relief in 2024? The Fed could start lowering interest rates May, April 2024. Some places are even talking mid-2024, like your June, July timeframe, that we could see actually some of the rates start going back. Now remember, as we've continued to raise that Fed's fund rate, as the rates have continued to increase, it takes about 9 to 12 months to see the impact of those rate changes, which means, and it will prove in time, if we raise them too high, too fast, and had a very big detrimental effect essentially on the economy. Even looking big picture, guys, we have seen 5 financial institutions at this point actually fail, which means that we need to figure out something to where we can kind of stop the bleeding and stop the rate increases. And again, most places are saying, including a couple of the economists that I follow, that this is going to be it for the rate increases. But the question then lies, how long are we going to keep it at the current rates? And really, I mean, are we talking 6 months, 12 months, 18 months, that we could see the exact same rates that we're currently seeing now? And again, mid-2024, a lot of people are saying those rates are going to go down. Now you couple this with home inventory. So experts do not see any improvement next year in the available homes for sale. Big reason is for a majority of people that refinance, they are just staying tight. If you're sitting on that 2.5% interest, if you're looking at a new house and you're looking at 7, 8% interest, not only the increase in the cost, but the increase in the rate, those kind of coupled together are keeping people sitting tight in their home. Even here in Northern Michigan, we haven't seen very many houses coming up on the market. And we've even seen 13 weeks of declines in prices and some of the home inventory that is coming up on the market. Because again, a lot of people are staying put. Now you also couple that with the rising rent. So rent around here, 1 bedrooms run around $1,400. Looking at a 2 bedroom, some of the places are around $1,800, which means that it is super expensive, guys. A lot of people are paying less for a mortgage, considerably less than a mortgage than if they would have to rent a place. And if you're looking to go ahead and rent a house, it is very, very expensive to do so. Now, also with that, a lot of the financial costs, so when you look at the buyers and sellers, when you look at all the closing costs for a mortgage, traditionally those have increased, home equity costs have increased, and we're seeing this kind of coupled again with the housing market of which way it's going. Realtor.com is saying they expect house inventory to fall 14% in 2024, which of course, if we're seeing a reduction in the inventory that we have on houses, that means that the prices are going to rise, even if the interest rates do stay the same, just because of the minimal houses on the market. We could see it, and it could absolutely force the prices higher, which is going to be kind of crazy. Because when you think of that, when you have one property, and we have seen it here, a lot of times now, it seems like there are multiple offers. We're seeing bidding wars for homes that are coming up on the market, especially if they're in ideal areas. A lot of people are willing to overpay for what the house is worth. And also what we're seeing, just like we've seen in, the 2008, 2009, is a lot of places are doing the appraisal. The appraisals are not coming back high enough for what people are bidding on houses, which means there you have to bring cash to the table because places will not finance. Also, keeping in mind, guys, is when it comes to the housing market in 2024, a lot of people are also getting crunched when it comes to your debt to income ratio. With the rising of credit card debts, a lot more people are financing things. Debt consolidation loans are up, credit card debt is up. Even the student loans are now in the repayment phase for a majority of Americans, which means when you look at your take-home income minus whatever your expenses are, your monthly liabilities, that is kind of going to break out that debt to income ratio so you know exactly where you're at. Now, federal programs do have guidelines you do have to follow, so definitely check with a realtor and check with your financial institution that you're looking to actually borrow from to make sure that you qualify. Now, big caveat to that, guys, is when you do pre-qualifications, and I want to touch on this just a minute, guys, a majority of the time you're going to be qualified for a lot more house than you can afford. This is where the budgeting aspect really comes into play. Going in with a number versus doing kind of the opposite. So if you have a budget, you kind of break everything down. You know how much you're bringing in. You know how much is going out. What are you currently paying in rent? What is the liability there? What do you have left over on the end of the month? So again, what we're seeing is with the increase in the rates, the increase in the house prices, people cannot afford the home that they're moving into. We're seeing 30, 40, even 50% in some cases that when you look, again, your kind of debt to income ratios, but a lot of people are home poor and they're going to be that way forever because they over purchased with a house getting in or overbidding on a home that they want to. And you don't want to be in that situation, guys. There has to be a place where you kind of put a line in the sand, say, hey, this is what we're willing to have. And also think bigger picture. When it comes to home ownership, there are a lot of additional costs that come with there. It is not just the mortgage payment itself, it's the taxes, it is the insurance, it could be the home repair, the maintenance, the utilities. You have to think big picture and kind of put everything into this bucket before you get into a home, and also thinking of the down payment. The more money that you're putting down not only can get rid of that PMI as long as you're putting 20% down, but essentially you're going to be saving on that monthly payment. If you're looking to put money down, you can make it affordable that way if you do have excess funds. Now, a couple things about this, guys. Make sure you're not borrowing the money. A lot of people do first-time home buyer loans, but they'll also do it for borrowing from their 401k, borrowing from the IRA, looking at a down payment, a couple different places. So essentially, you're sacrificing your investment accounts or your retirement accounts to take the money and put it down on a home, which I do not recommend at all, guys. Save up the money for the down payment. It's not, borrowing it. If your parents can gift you something, your grandparents, whatever it may be, gifting is a great way to get it. But remember, the gifting you cannot pay back. It is again, legally, there are some caveats to that. So are the price predictions, is it going to look better in 2024? Overall, it seems, again, a lot of economists are saying that the inventory is going to be down, but rates are going to go down, which is going to be interesting to see the combination. And then, of course, the housing prices could see the same or could see an increase going into 2024. So let me know in the comments what you guys think about that. And as always, thank you guys for watching.